they need to know they can do it. We live in an environment that says, not that they can't, but hasn't given them the opportunity to. And if you're not comfortable and you don't feel you're being respected, move on, because you can do it. You do have the knowledge and you do have the wherewithal. So, and the resources. Women have way more resources than they know.
Welcome to the Women Choosing Growth podcast, where we bring you practical advice and guidance on how to grow your business and achieve success in your entrepreneurial journey. We feature inspiring stories of success, challenges of growth, and lessons learned from women entrepreneurs, industry experts, and thought leaders who have been through the growing pains inevitable as an entrepreneur. Whether you are just getting started or are looking to scale up your business, our show is designed to provide you with the tools, resources, and community you need to grow your business. Join your host, Tina, a lifelong entrepreneur and business growth advisor, as we explore topics such as marketing, sales, finance, leadership, and personal growth, all tailored specifically to the needs of women entrepreneurs. So if you're ready to grow your business faster and smarter, and learn from the experiences of those who have traveled the growth path before you, then this podcast is for you. Thanks for tuning in, and let's get started.
Welcome back to another episode of Women Choosing Growth. I am your host, Tina Sue, and excited to bring on our guest today, Lauri Kibby. Lauri has 40 years of experience in investing. She got her career started in real estate, but over the years, she has invested in health and beauty, biomed, fashion, all of the things. And she has made some large investments and some small investments. She has made good investments and bad investments. And she is here today, and her company, Selene Brighthouse, is on a mission to educate women and empower women to be able to really get comfortable with investing. And she is here to share all of her trials and tribulations that she's had. I share a little bit about some bad investment that I have made because, it is an investment, but there's so much good side on investing. And so if you're someone who is interested in investing beyond the business that you already are working and investing in every day with your time, but looking for more of a passive investment, either in real estate or in other businesses or in certain verticals, this is the episode for you, because she shares it all with us today and has free resources on her website, which we'll share in the show notes on where to get started, and just getting started on educating yourself on investments and what to look for and how to do due diligence. So we have a lot to unpack in this episode, so stay tuned. Welcome to another fabulous episode. Today, we have with us Lauri Kibby, a woman's advocate, entrepreneur, managing partner of Selene Brighthouse. And she's talking to us and aligned with her mission to help women use investing to unlock their full potential and embrace their power, which is all of my love language, Lauri, because there's so much misconception about what investing really is and how an entrepreneur who's maybe running a business or two can also get into investing, and not just, we're not talking the stock market here. So we are so excited to have you on the show today and give us your 40 years worth of knowledge in 45 minutes or less. No pressure.
Thank you, Tina. I'm not feeling it yet, not sweating yet.
Okay, perfect. Well, I'm super excited to have you on because there are a lot of entrepreneurs who want to do more in investing, in whether that's businesses or real estate. And, you and I had talked about it prior that there are some misconceptions out there. So before we dive into that, though, you have had 4 decades of this experience. So how did you even get into investing so long ago? And maybe share a couple of your pivotal points in your investing life here.
Thank you. First of all, thank you for having me on the show. I started off as an entrepreneur. Actually, before I even finished university, had opened my first business, which I ended up selling to my employees. And just, awesome. Moved on to opening several others. And then I just had a vast interest in different businesses and realized that I couldn't open them all or do them all myself. So I started investing in other people's ideas. And then, having opened and started so many businesses, and some very successful and some not so successfully, you learn a lot along that way. And so I would sit on boards of other companies that I would invest money in, or um, participate as a consultant, if you will, providing advisory um, information or advisory activities. And just so over the years, I've been an investor, and both in my own businesses and in others. Um, and then, at some point in your career, you realize that you're working at far too many, and you're working much harder on making money than you are letting your money make money for you.
Mm-hmm.
And you start to make the distinction of between what is really investing and what is putting your money to work for you, but you're working at it.
Mm-hmm.
And my experience, and I've been in real estate for most of my career. So though I've invested in everything from health and beauty to biotechnology to, oh my gosh, now I'm in fashion, even some investments in fashion, my primary focus has been real estate. And I talk with a lot of women who are invested in real estate, but they're doing things like fix and flips. And
Mm-hmm.
they're working very hard at it, in addition to also having a job oftentimes. So really what they have is two jobs. And so,
Exactly.
yeah, so making that distinction, I think, has become an important part of growing your wealth, understanding where your money is actually working for you, or you're not just working to make more money, which you then have to roll into making more money.
Exactly. It's a vicious circle.
It's a vicious circle.
Yes.
So,
And I think you hit the nail on the head there with the example of fix and flips, although I think it goes into other industries outside of real estate as well, where you invest into another business, but then you're either advising or you're part of it. You end up having six jobs that you
right,
have equity in is really
right,
what some people consider the definition of investing.
right. Well,
So
I
go ahead.
think a good way to look at it is to look backwards from how's it taxed. I'm not a CPA or an accountant, so it's not tax advice. But if you think about it, when you do a fix and flip, I just use that as an example. But certainly, if you're investing in a business and you're working in it, that's income.
Hmm.
It's not capital gains, short or long term. It's not a return on an investment where you put your money like you would like in the stock market, as an example, and somebody else is doing something with it. The value increases, and when you sell it, you have a gain of some form. But it sits over there, and someone else is doing the work to make that grow for you. And I think that's a really important distinction to make when you're considering being an investor. Like, what is that?
I love that. That is so simple to just, I mean, I've invested in some companies. I've also been the employee of many, just like you, only a couple decades. And just to think of like how does that come onto your tax return? Is it income from your job or is it passive? Like basically is
Right,
what you're saying. I love that.
right. Yeah, so it's
Hmm.
important to look at. And I've lost, I've made some very seriously poor decisions in investing and have lost significant sums of money, which is really what led me here now to being very committed to the ex- providing information and helping women grow in their sophistication level of understanding how to make a good investment and how to be a good investor, um, by what is due diligence, how do you do good due diligence, how do you assess the people you're going to invest with, how do you use
Hmm.
your intuition, if you will, along with your critical thinking and your set of values to really make better decisions for oneself. So,
Yes. And I want to take a step back to the bad decision that you've made because I
right,
can say the same exact thing. And the sad thing is, I feel like I put it out to the universe before it happened to me because I used to say, well, you're not an entrepreneur if you don't have a few. I used to tell other entrepreneurs that, like, no, it's okay. Like, you make some poor choices along the way, right? Just like you do in your own business. And then I invested in a franchise that imploded, like the franchise system imploded.
ooh,
And ultimately I could look back and say, well, Tina, you didn't do enough due diligence in the areas where they were selling something that wasn't true. And the market changed. And so like there was a big pivot in the market. It's kind of like if you go back to, renting a video and now you go to Netflix. It's almost like that. And I didn't see that coming. I didn't apparently do enough research, but still it's like I lost with commas, I lost money with commas.
Well, I lost money with commas, and then I lost money for my daughter with commas, and then my sister with multiple commas. And
Yes.
it's an interesting thing about losing large sums of money. And I look back because I consider myself to be a very sophisticated investor. I have not
I feel
only
the
an
same.
MBA in finance and years and
Mhm.
years of experience. And I can see all the places I made mistakes. A friend referred me, so automatically my guard was down, if you will,
Mhm.
or my investigative guard was down because it came recommended. They claimed that they had a lot of experience with this particular person who was running the investment. And then I went to dinner with them, and it was all lovely, but I noticed that how he spoke about certain things, specifically his wife and his family, was out of sync with my set of values. But I was like, okay, but the return was so amazing. And if I'd really had on my critical thinking hat, I would have realized the return was ridiculous. And so that whole idea of missing out on such an opportunity and getting
The FOMO.
the FOMO, exactly. And then, of course, I got the return for a short period of time or a couple of years, and then suddenly it disappeared. But over that time, I had invested more and more.
Mhm.
I was left with really looking at who me. First of all, I felt incredible shame and realized, wait a minute, like that's ridiculous. This happens all the time.
Yes.
It only improves how I go about being an investor. Um,
Mhm.
and there's always room for improvement, no matter how experienced or knowledgeable you may be. And it really allowed me to start taking really much more responsibility for how I looked at the investments and what was it that I wanted to achieve, and to have a much longer view on it. Interestingly enough, because that's
Yes.
very short term. In that, oh my gosh, look what I could do, and it allowed me to like expand my horizon as to what really is the legacy that I want to create. And so it's been a very valuable experience, as hard
I
as
would
it
say the
was.
same about my bad investment as well. I learned so much from it, so much more diligent on other businesses and investments. So, I wanted to slow down on that for our listeners because that's why everyone doesn't invest too. Like some just don't have the risk tolerance. Not saying everyone's going to make a comma mistake, but investing does have some risk in it. And it's like even in business, if you're not failing even through processes and procedures and different things that you're doing with your own business, like you're probably not stretching enough. So I'm not recommending to like just go out and be like, oh, I lost a bunch in investing or I keep making bad mistakes. But I wanted to make sure like people understood it is pretty common. I mean, like you and I didn't know each other before and we have similar like, yeah,
Yes.
we're risk takers and therefore we have made bad risks.
Listen, yeah, and I think even if you, so we talk about risk that's in making an investment. There's risk in not making an investment because
Hmm.
you put
Oh,
your
for sure.
money in your mattress, that old saying, and
Hmm.
you are losing money every day.
Yes.
I mean, just by
Cost
virtue of
opportunity lost.
that, and also just what is it, the value of a dollar?
For sure.
So there's a risk in everything, even if you're not taking action. And
Hmm.
so the question is understanding where your risk tolerances are, and how to actually make sure that you put the guardrails on that so that you're doing the best you can, because there's all kinds of things that happen, as you said earlier, that you can't predict. Nobody could
Hmm.
predict COVID. Nobody could predict the downturn of 08, 09 in there, the technology
Yeah.
bust in 1999. Like those things
Yeah.
happen. So
Who knows what's going to be predicted here? This year's already been a
that's
little weird. So
exactly. For
we'll wait until
sure.
the end of the year to predict what happened in 2025. Yeah, I think that is that is important to know. But the thing is, everyone listening is an entrepreneur, so we already know that our listeners have a little bit of risk tolerance. Otherwise, they wouldn't be in business for themselves. So, um, let's dive in. Where do you recommend people start? So if we have people listening that they're already an entrepreneur, so we know that they've taken a risk in themselves and a risk in their people, but want to diversify their wealth. Where does one get started?
So, I mean, understanding where you want to go, where you have knowledge. So, let's say you own your own business in any industry, and you have some money in your portfolio that's in stocks and bonds, which is typically if you're in a Schwab or a
Sure.
Fidelity or whatever, that's where your money is. So you're wanting to do alternative assets,
Hmm.
such as real estate, such as I'm trying to think what other kind of that you can't access through a regular portfolio, because many of those you can access through a stock or REIT or, but a typical where you're buying a share in something.
Yeah.
Um,
Or like even another business,
you
right?
could do
That's like
another
more like the angel
business.
investing,
You
like
could
I
do
do.
angel
Yep.
investing. So, I mean, what I do is I do research. There are angel investing groups that you can belong to.
Hmm.
There are online like Start Engine, where they do a lot of due diligence to have the companies that are on there. I've actually purchased stock in startups through Start Engine and that have gone public. So I've been very successful through there. Oftentimes, your university, your alumni organizations, I also invest through Alumni Ventures Group, which is a large venture fund that is actually through most of the major universities have one. And then, of course, there are private funds like what I have, which I have a small real estate fund that does real estate investing on behalf of our investors. So I think it's first defining what areas you'd like to diversify into.
Hmm.
And if you don't understand what you should be diversifying into, that I would spend some time researching, understanding what is a diversified portfolio, what work to balance the other, what asset classes work to balance each other, so that you're modifying the risk in your portfolio. If one goes one way, as they say, you have something that's balancing that out, that's usually
Hmm.
doing well. Um, with the use of AI these days, asking really good questions in the AI, you can actually get some pretty good research out of it as a starting place, and then doing
Okay.
readings. And that's what I usually do. And even on new industries that I invest in, before I, like through the venture group, before I take a chance on something they're offering, I go and read about the industry and try to understand it a little bit more so that I know what I'm looking for when I read their documents and can get questions answered first that way.
That's great advice. I know I have a couple clients that I work with that are also investing, so I'm coaching them through their business growth, and then also like they bring me like, "Hey, I'm wanting to do this," and one of my clients that I absolutely love, I'm like, "Slow down, like this one is a clear no right off the bat." Um, and I always give the advice of like putting your parameters down, like what before you go look into any investment, like have your guardrails. It has to be like for me, I want women owned. I want, establish my investing is more in growth mode where it's like
Mhm.
they can't get loans from the bank or it's ridiculous interest rate, but they also want a partner in that. So not necessarily startups, but I have very clear parameters because otherwise you get kind of sucked into like the cool things that like, oh, I've never heard of that. And oh,
Mhm.
well, I guess I could afford that. And then if it doesn't fit within your guardrails, like it's an automatic no. And it just makes that due diligence process, which we'll talk about in a minute, it just makes it so much easier. It's like it either fits or it doesn't. And then you can move to the next stage. So that's something where I've always given advice of just really like what you're saying, get super clear on what it is that you want in your portfolio, what kind of returns, where is it located,
Right.
who's running it.
Right. The values, your values
Yep.
in your investing, um,
Mhm.
your personal values, because I'm very clear that when you're interviewing, you should be interviewing the people you want to invest with. Like they should be interviewing you too, because if a group is willing to just take anybody's money, it's probably not somebody you want to invest in,
Mhm.
because it's a partnership. In the end, it's still a partnership in
For
some
sure.
ways. You may not be
Mhm.
working with them, you may not, but you're relying on them to produce, and you want them to give you information, and you're going to need to work together. So I think also understanding what personal values you want in the people that you're investing with. So there's a lot of preliminary things before you get into the actual investment itself,
Exactly.
and understanding their financials and their projections in the marketplace and all of those things. That comes secondarily to that first round of who are they, what am I looking for, what's, those kinds more qualitative, if you will,
Mm-hmm.
instead of the quantitative. So.
Yeah. And you said it, and I want to repeat it too. It's like for me too. It's like, what is my role in that? I passed up, which I'm sure is going to be a great opportunity for someone, but I didn't understand the industry,
Mhm.
and it would have taken me so long to provide value in what I do to that company. So it could have been just a passive investment and hope that it works. But me, I want to be more involved. So it was like, that was just too big of a leap for me. I know nothing about that industry. And so I passed up on it because that's part of my value.
Well, and you used a very interesting word, more than hope, and you hope that it turns out. And
Yeah.
unfortunately, I think a lot of people invest and have their fingers crossed, hope it turns out, and you don't want to invest that way, because
No,
if
hope is not a strategy
hope is not a
for
strategy,
anything.
that is for sure. Um, and you know what, I use that in email. I'm always like, no, don't use that word, hope. But
Yeah. Hope you have a great day.
that's
You
right.
just should.
I try to say, trust you'll have a great day. Um, so you want you want more than hope when you're investing, and I think because if it doesn't work out, you want to be able to look at internally and say, I did everything I could to make
Mhm.
sure that I was as well informed and I made a good investment, because you can still make what's called a good investment and have it not return what you thought, or even not turn out. Doesn't mean it was a bad investment. It's
Tell me more about that. So if you didn't get a return, didn't get your money back,
the return was
um,
not good.
the return
The
is not good.
results were not good, but that doesn't mean that you didn't make the investment in a
Hmm.
solid, informed way. And
Gotcha.
and so making that distinction, because how it performs is different than having done a good investment. Do you
I
know
understand what you're saying now.
Yeah.
Right. If you and that's where the self due diligence as well as the financial and all of the tactical things, but that's where, like you said, you check back with yourself and go, okay, I did what I could do, and you're not running it. You're not running that business or that fund or whatever. So like there, you only have so much control in that. Okay. So I see what you're saying.
Yeah, and we tend to collapse it all into one thing. So, oh,
Yeah.
that was
Like I
a
lost
bad
this one. It
investment.
was a waste. Yeah.
Right. So I didn't do my work. I was not, that's not so. And I think that's
Yeah.
important, because especially women, walking around and feeling shamed that you lost money, or that you made a bad, like it didn't work out, therefore you made a bad decision. I think that's important to make the distinctions there, because then all it does is add to your fear about investing again. And I think it actually limits your ability to do your due diligence, because now you're afraid you're going to make a mistake, and you're not even sure. Do you know what I mean?
Hmm.
It's counterintuitive, but I think that being able to acknowledge I did everything, it was a good investment when I made it, a good investment decision, maybe that's defining it a
Yeah.
little better, and the results were not what I expected, and separating the two.
I hope you're enjoying our conversation with Lauri today about investing, and you've obviously invested in your business. If you're looking to take that investment of your business to the next level and make sure that your company is scaling and building for enterprise value, then you need to go check out the Tina-Sue website. We have all kinds of information on there, as well as an opportunity to work with us directly, or even more importantly, for you to be able to get the resources that you need to build that business for scalability and top dollar when you ultimately sell. And that is through a self-paced course that you can check out on that tina-sue.com. Has everything that you need to position your business and your wallet in a place where you can start to invest as well. Go check it out. All right, before we dive back in, I want to take a moment to talk about something that can take what you're learning today in this episode, as well as our previous episodes, and turn it into something that is real strategic growth for your business. For example, if you're feeling inspired by what you're hearing today, maybe you want to improve your leadership. Maybe you want to refine your systems. Maybe you want to build a more scalable business. Maybe you just want to get out of your own way and break free from those limiting beliefs that may be holding you back. If are you feeling that way, then you are exactly the kind of entrepreneur who will thrive in our strategic shift program. You see, it's designed for women entrepreneurs just like you, who are established, ambitious, and ready to build something that is not just successful today, but is positioned for more growth, long-term value, and freedom, right? That's why we're in business in the first place. In this program, you'll get proven framework, tools and resources, financial insights, strategic mindset shifts, everything that you need to work methodically through the growth of your business. And the best part is it grows with you. This isn't a course that you just take once and has basic business information in it. This is something that has the actual tools as if you were working alongside a coach to help you build the foundation and continue to build on it year after year as you continue to scale. It's even designed to work with your leadership team once you get to that point in your business. So if you're serious about building a business that is valuable today and continues to grow in value while you're not having to work harder, then check out the strategic shift on Tina-Sue. Look for courses and look for strategic shift. So let's get back to our show. What do you think about, because I know there, like you mentioned it too, like there's other investment funds or organizations that someone could contribute $5,000, $10,000, which I consider minimal risk, right? So what do you think about those as far as someone who's getting started?
I think they're a great idea. I did that. I still do that. When something that seems very tenuous, you don't really know, like this one investment that I mentioned that I did through Start Engine, I just invested $5,000. And it ended up going public, and it's worth quite a bit more. But I had no idea. I didn't have the time to really research the industry. I could just do some peripheral reading, but it had great documents. I knew a little bit about it, enough to feel like their advisory board, their board of directors, the founder, they were solid. So I invested 5,000, and one could say it was throwaway. Now it depends on how much money you have. So for some people that would be a very large investment. So I don't want to minimize that could be a large investment, but it turned out to be a great deal. I did the same, I hate to say it, with a little bit of crypto. It's like $2,500. I put it in Coinbase, and
I do too.
No, I'm not sure if it's a good thing to say anymore at this stage.
Yeah, we're not recommending it, but I did the same for the same probably reason. Like which I think you probably can even elaborate on it for the crypto. It wasn't a FOMO thing because like we knew about crypto years ago and we had talked about it. And my other half is a financial advisor, and so like it was taboo for a while, and then it was just like we can afford to lose this amount of money. So it was really more of a let me watch it on my phone and like see what happens.
Exactly.
So in my mind, it's like, sure, it's an investment, but I don't even have any plan on what that could be versus if I'm investing in a business, like I'm looking at a P&L and figuring out what the forecast is and whatnot. So yeah, it was like fun money, if you will.
Right. And I don't think that's a bad idea if you have the ability to do that, and it's worked out. I've watched it go to practically nothing and then go back up. I mean, it's like hysterical to me, but
especially if you have Coinbase, because that literally is like doing this all day long. Then you get an alert, and it's an alert that it dropped $3. Like, okay. So same way. But so small investments can lead to great returns and maybe a great place for someone to get started so that they're not so that probably get that little comfort zone, know what to look for. Okay.
And I would suggest using some of these platforms. That to be on those platforms requires a huge amount of due diligence on the platform side to get there. So that you know that you're already looking at investment opportunities that are vetted to a certain degree. So again, some of them that I've looked into, the companies that are listed there, not only do they go through their own due diligence with the platform, but they also have to have already raised a significant, seed round sometimes. They already have revenue, many of them. So I think those platforms can give you a level of comfort, and generally they require that the companies that are listing have a huge amount of backup material that you can read and understand who they are. And there's a very well supported communication system so that you actually have an access to be able to read their reports and get reports and all of that. So that's one way to help you in your
Mm-hmm.
due diligence. I'm a little skeptical, not skeptical, but slower to take up investing in friends or
Mm-hmm.
recommendations now of friends who are doing startups. Maybe I will do that as more, again, like the Coinbase, my crypto investment, if I think
Sure.
somebody has a great idea. But um, unless they come from a hugely successful career and they're now branching out on their own, I'm a little bit more hesitant there myself, because there's
I
just
am the
so many
same.
hurdles. Yeah, so many hurdles to running a business and
From
getting it off the ground.
right, and even when it's in the friend or not the same if it was referred to you, but by a valid source. But in I feel like the diligence, if you will, I want to use that word again, but I feel like there's more of like that rose colored glass. Like you're not going to look the same if you know the person versus if this was someone coming off the street. I think when I look at investments off the street, I have more of a why wouldn't I want to invest in this versus a friend would be like, oh, how can I help her? Right. So it's like, it's a total different lens
Right.
for
And if
me.
things go wrong, it's very uncomfortable to hold people accountable,
Yeah.
or to make suggestions. And then, because you may be able to, listen, people are sophisticated in their own work. Maybe they're able to make contributions, and then the person who's running the business doesn't heed it. Or, do you know what I mean? There's just so much that can go wrong there. I think investing should definitely be arm's length, uh, to the
Yes.
extent that it just works. I think it works better.
I think we have some good guidelines, right? Like if you're
Yes.
new, start small. Maybe some of the, in one of these funds that are already doing due diligence, don't look at friends and family. What else do you recommend so that our listeners can really end up being a very strategic investor over time?
Again, I would say find industries and become an expert in them if you can, to the extent you can.
Hmm.
So, if you like technology, then make technology your alternative investment. There are plenty of platforms where you can access investing in startup technology.
Hmm.
And
A
I
lot of
use that only
startups.
because it's on the tips of everybody's tongues these days, or AI and whatever. But
Hmm.
choose an area and become really knowledgeable about it,
Hmm.
as one, I think, long term strategy about how to be as successful as you can be within. Because if you are throwing darts at all different kinds of industries and you're only doing enough to make an investment in that one time, it's hard. It's harder to make good decisions about them. Um, I also think that, if you have a little bit of how funds are working, if you're making multiple investments, you want hopefully all of them to succeed. We know that the percentages and the statistics are that they won't all succeed.
Hmm.
And so if you're within one industry, hopefully there are trends you can see and you can diversify within that industry a little. Um, I think everybody should have a little bit of their portfolio in real estate, no matter what.
I was going
Portfolio,
to ask you about that.
yeah, I do. Real estate is a longer term investment. It's all about timing. It's an
Hmm.
opportunity. This is not including fix and flips, because I don't believe that has the same opportunity and timing. If you're buying and remodeling a house, you need to sell it no matter what's going on, or
Hmm.
or then you're renting it, and that may not be free up the capital you needed given how you use capital. But I think having real estate's a very good idea. And real estate you can accomplish in multiple ways. There are funds to invest in that invest in different asset classes within the real estate portfolio. There are REITs that you can buy, shares in. Those are
Hmm.
generally nice and stable, not huge returns, but they're nice, stable. But you should always have some. And I've had discussions with different individuals. Some say as low as 3%. I say a little bit more than that. I think 3% is a low percentage.
You could get that in some bank accounts right now.
Yes, exactly. So
Much safer.
I would have more than 3% of my portfolio in real estate.
Yes.
And this is not including your home, obviously.
Right. Exactly. So let's talk about the real estate. I know that was like you've been in real estate almost the majority of your life. What got you in? And then, like, the majority of your investments are in real estate, except for you've have some, would you say, health and beauty and some other
Yeah,
random industries in there?
I do. I've invested in all kinds of industries, but out of business school, I went to work in for Irvine Retail Properties, which is in Southern California, doing strip centers and mall repositioning. So I ended up my first job out of business school in real estate, and I just stayed in it. I ended up owning a construction company and building homes and doing restoration. Is just what I learned,
Mm-hmm.
and I just became an expert in buying land, positioning it, entitling it. I built several small home developments, and it just happened to be how my career developed over time.
Okay.
And I love real estate. I think real estate allows me to be creative. You can be creative in it. Now, let's make it clear, like I'm working in real estate, right?
Mm-hmm.
I also have real estate investments. So I'm invested in some large funds that do multi-family
Okay.
across the country. So I work in real estate and I invest in real estate. And I
When you say multi-home, that's not, I'm going to go buy a fourplex in my
no,
neighborhood.
no.
Yes.
No.
Describe what that is.
Yeah, no. I built small developments that would have like 7 or 14 homes in them. And sell them. So that was a business for me. And then the fund that I invest in is does very large. They're $100 million fund at a time, and I invest in real estate that way. I also run a fund now myself that does strip center consolidation, value add purchases, and consolidating into a portfolio. So I work in that. For those who invest with us, that's an investment in it. So I'm making that distinction because I have both. And
Mm-hmm.
the real estate I like to do because I'm never going to go out and buy big apartment buildings and want to run them. It's not at all interesting.
You don't want to be a landlord.
I do not want to be a landlord. So
And I think that's a distinction, just like you said in the beginning, like a
absolutely.
fix and flip is, to me, is similar, maybe a little less work to go and buy that duplex or the fourplex or the
Mhm.
sixplex that's in your neighborhood. Maybe that's the way to get started, but that's still a lot of work. You're now a landlord and you have another job.
And it is, well, that's the key word. It is still a job. It's still
Mm-hmm.
income into a business. You are not, not invested. Now, interestingly enough, um, the fund that I'm in, I do get K1s because I am a holder of a share in an LLC, but it comes to me as a K1 as a return, a share
Mm-hmm.
of, it's not wage taxed.
It's not K1
Yeah,
wages. Yeah.
yeah. So,
Yes.
um, anyway, so I do think everybody should have some real estate. And I do think that picking an industry or two and diversifying into that, but I wouldn't do it across all industries. It's just too hard. And you can do
Mm-hmm.
that by investing in the stock market in a mutual fund, if you want to get exposure to multiple industries. Um, so,
What is your thought process be um, from stock market investing to some of these other options that are not in I don't know, the right word would be diversification isn't necessarily it, but maybe it is, of where like all the money isn't sitting in the stock market, which my other half would, as a financial advisor, that's usually where they like, oh, let's get you a fund. We're a little more creative than that. So when someone's thinking like, oh, well, if I can go get a REIT or I can go get the same type of return in the stock market, that's easier because I've got the app on my phone or I got my financial guy. What's the upside to some of these funds or doing something outside of the stock market?
Well, I think part of it is satisfying a personal desire to be involved in what you're. I mean, there's nothing wrong with stock. I have a huge I have a stock portfolio. I have an investment advisor who manages that portfolio, makes recommendations, and they do a
Mm-hmm.
better job than I could doing it. But it doesn't take anything of me to do it. Do you know? Unless you're somebody who looks at it every day, and I don't highly recommend that
I don't. That's why I have him. That's his job.
yeah, and even then, it's like nerve wracking. But I think that it's using it's it allows you to use more of your intelligence, your um, to be in to dig your hands into things that are it just expands who you can be. You become an expert in an area or much more versed in an area. It expands your knowledge of what's going on in your community, potentially if you're invested in your community or in an industry. um, I think one has to evaluate how much energy they want to put into it, and does it satisfy a creative urge or a desire for learning, or
Mm-hmm.
is there a reason why you would want to do that? And I do believe it offers an opportunity potentially to find that unicorn or to invest in something that within your portfolio could be what could be considered a unicorn, and maybe not, a big gigantic uh, unicorn like one of these big, venture
You
funds.
invest in low and they go public, and
Yeah,
or one of the tech companies that go sell to Google.
but look at what happened. I did that small investment that I told you, and it went public, and my little $5,000 is increased incredibly. That
Hmm.
was like a little bit of a unicorn. Now it's not making me $100 million, but you know what I mean. Like there's that opportunity, and you did the work of it, and it satisfies. I don't know. It satisfies me my intellectual curiosity, if you will, to be involved
Yeah.
in things.
And honestly, it's not about the dollar amount that you make, at least in my mind, it's the return on that, right? So it's like, yeah, you only spent 5,000, but you probably got a 3, 4, or 500
Exactly.
time.
Exactly.
So you're not writing home with that check, but the return on that, that's really what it boils down to is return on
Right.
investment. So if you made a bunch of $10,000 investments and they all had a 3, 4, 500 return,
Right.
that's not a bad place to be.
Right. Right.
You're
And
not getting that in the stock market.
right, you cannot. And the only place you can do that is by spending the time to look and find those opportunities. And
Mhm.
I find it to be fun to do.
Mhm.
And, because it expands my knowledge about things that I might not otherwise know. And, just, I don't know, it's fun. I don't know. So maybe it's that entrepreneurial piece that gets to be expressed in another way. So,
I think so. I think so. I think you and I had a lot of similarities in inspiring women to think bigger, and a big passion just for helping others, and like that's part of the investing strategy for myself anyway.
yeah. And if you think about it, I have two daughters. I want to leave them a legacy, and I would
Hmm.
love to leave them a legacy that isn't just a stock portfolio, like that they have an inheritance of these companies that they have a position in, and they're intrigued by that. It's interesting. My daughters have gotten much more involved in thinking about these things as I've done that. So, and I want to leave a legacy. I don't want to just not, I don't want to not think about that because I have an opportunity. And I think you and I mentioned in an earlier conversation, there's this great wealth transfer. So women are going to be coming into a tremendous amount of money over the next 6 or 7 years. I think it's $30 trillion. And whether it's 100,000 you inherit or 10 million, you know, thinking bigger,
Hmm.
thinking about the legacy that you might want to leave with it, thinking about what would you do with it, um, and being prepared for that, I think is very valuable. And you can do that now by making these smaller investments and looking at the industries and becoming better versed in them. Even if you don't make investments, it's a good thing to do right now.
I agree. It reminds me of a guest we had on last year, Trixie, and does investment. And it's truly her passion because of her own situation, and so it's in housing and real estate as well. but because of something that she went through. And so you'd have to listen to the whole podcast. But I feel like that passion connection, like you said, either your expertise or something, even if your business is over here doing whatever, retail, but you're super passionate about something else. I think, like you said, that's a great opportunity and a reason to dive in and learn more and be able to help that sector, if you will.
Absolutely. And it's interesting because even having that knowledge, when you're meeting new people, I'm always amazed at how I meet people who I actually know something about what they're doing or what they're up to, that I can have a conversation with them. And
Mm-hmm.
possibly it's because I've invested in so many different areas and experimented with them, um, or researched them and chose not to, but I still read about them. I still try
Right.
to understand them. So
Mm-hmm.
that just broadens who you are in the world, I guess.
I think that's great advice. Let's talk a little bit about your fund and what is in what's in what
Sure.
is in that.
Sure. Well, first of all, Selene Brighthouse is committed to educating women to be as sophisticated an investor as possible, and to be what we call
Perfect.
better LPs, which means you're a limited partner in an investment, that you're a really good limited partner. You understand investing. So we actually run educational programs every other week, talking about it's all centered around real estate, but it's applicable to other investments. So how to do due diligence, how to do research, these kinds of things. And our fund, a real estate fund that invests in strip centers and is putting them together, does value add with the whole purpose of consolidating a portfolio to then sell off to a larger um, bank than us. And
That's usually what, like a 4 or 5 year
yes,
hold?
yeah,
Like you're, yep, yep.
about 5 years, 5 to 6 years. So,
Hmm.
and that's what the fund does. But it's based around providing a vehicle that is very moderately risky. It's not a big high risk, with what we hope to be outsized returns. And they're in high demand right now. For us, it's kind of an ecosystem because many of the tenants in these centers are women. And if
Mm.
we improve the centers, the business at the centers improve, interestingly enough, which then, as we know, women take that improved business revenue back into their communities and their families. And so we kind of see it as a social, socially oriented investment strategy as well,
Hmm.
having an impact on more than just improving the center, but actually improving the community and improving the lives of our tenants as well. In fact, it's the only type of investment that we know of where if you improve the business and create good returns, you're actually improving it for your tenant as well.
The tenants and the community.
Yeah,
It's like your investment has a heart.
that's what we're hoping for. So, um, and
Hmm.
it's a touch. You can touch and feel. So our investments, our whole objective is that we run it in a more community oriented way. We want the women who invest with us, or whether you invest with us or not, are part of our educational program, that we get together, that women can, if you will, hold hands and learn more and become better at their own strategies in life around investing and creating their own wealth and legacies. So it's kind of a two-pronged approach.
I love that. So some of the people that we were kind of talking about before, those that haven't invested yet and want to get started, that sounds like a perfect place for them on the educational piece.
Yes.
Then as they feel more comfortable, either invest with you and your company or maybe some of these
Elsewhere.
smaller ones, but at least the education is like step
Yes.
one.
Yes, absolutely. And taking our education does not require any kind of investment. That is something we just offer because our commitment is to educating women to be better investors and
Hmm.
more informed investors. So we cover everything from how to invest your IRA as a self-directed IRA, to how to do due diligence, to how to formulate questions within an industry. So it's a broad array of different kinds of topics. We take you through how to do a financial analysis, how to read the numbers,
Hmm.
those kinds of things, even definitions. And I think we have some downloadable information that just gives you what is the definition of some of the words you'll hear when you're, you know, talking
Like
to
EBITDA.
somebody. Yeah, or IRR, and what does
Yep.
IRR mean and how's it calculated. We even have a little
Hmm.
workbook if you're a real estate investor you can plug in some numbers. It'll give you kind of projections and returns and things. So we're just trying to, our goal is to really have women come into their own in controlling and creating their own wealth.
I love that. That's why I was so excited to have you on here. And
Yeah.
wealth of knowledge. Appreciate you sharing that. What are your last few words of advice for women either thinking about investing or taking up their investing a notch?
That they need to know they can do it. We live in an environment that says, not that they can't, but hasn't given them the opportunity to.
Mm.
And if you're not comfortable and you don't feel you're being respected, move on, because you can do it. You do have the knowledge and you do have the wherewithal. So,
And resources like you.
and the resources. Women have way more resources than they know. So,
I would agree
especially
with
the one up here.
Right. Get out of our own way. Get out of our
That's
own heads, right? Take a little risk.
Yeah.
I love it. Thank you so much for being with us today, Lauri, and all of your advice. I'm going to make sure that we put the connection in the show notes so that people can go to your website, get some of the I believe the link is there for the free classes, right?
Yes.
Yeah.
Absolutely.
I was pretty sure I saw that out there.
Yeah.
So we'll make sure that they have access to that as well.
Wonderful. Well, thank you. It's a great conversation. And I hope the women listening, take those reins and, let's gallop.
Yes. Your write down your takeaway for this is I'm going to go spend whatever that dollar amount is in the next 12 months on a really, on an investment that I have done my homework on. And whatever that dollar amount is, make that one of your goals for the next 12 months.
Absolutely. Take the step forward. It just leads to
Yep.
more things. It's like that little crack in the dam. Just
Yep. Write it down. It's now a goal. It's
right.
not a hope.
That's right.
It's
Exactly.
a goal.
A dream. It's not a dream. It's a reality.
It's a reality. You put it down, put it on your work papers. Yep.
Absolutely.
I think when we originally talked, I told you that every year I set the goal of how many I'm going to invest in. So
I think that's a wonderful thing to do. I've started writing down every morning, getting up and what do I want to achieve within the things that I'm working on, investment wise. So it's a good way to get things out of your mind,
It is. Yes,
Sure.
absolutely.
For sure. Thank you so much for having me.
Thank you.
I hope you enjoyed today's episode. Please be sure to hit subscribe on your favorite podcast platform so you never miss an episode. The Women Choosing Growth Show is not just another podcast. It's a tribe of women helping each other grow. So please, share this podcast with all the women entrepreneurs that you would love to see succeed. If you'd like to know more about customized business advising through Cultivate Advisors, download business tools, or sign up for upcoming events, visit www.womenchoosinggrowth.com. Once again, that's www.womenchoosinggrowth.com. Remember, we are in this together. See you on the next one.